Welcome to Global Forex Guide, your ultimate destination for Forex trading insights and financial strategies. In this video, we will delve into the world of Forex trading, providing you with a comprehensive guide on what Forex is and how it works. From understanding currency pairs to exploring market dynamics, this video will equip you with the essential knowledge to start your trading journey. Let's uncover the fundamentals of Forex and why it's a powerful tool for financial growth. However, 1. What is Forex? Forex, also known as foreign exchange or FX trading, is the process of exchanging one currency for another. The Forex market is the largest financial market in the world, with a daily trading volume exceeding $6 trillion. Unlike other financial markets, the Forex market operates 24 hours a day, 5 days a week. 2. How does the Forex market operate? The Forex market operates through a global network of banks, brokers, and financial institutions. It is decentralized, meaning there is no central exchange. Trading is conducted over the counter, OTC, through electronic platforms. 3. Key terminology in Forex trading. Currency pairs. Currencies are traded in pairs, such as EUR/USD, Euro/US dollar. The first currency is the base currency, and the second is the quote currency. Pips. A pip is the smallest price move in a currency pair, typically measured to the 4th decimal place. Leverage. This allows traders to control larger positions with a smaller amount of capital. For example, with 100-to-1 leverage, you can control $100,000 with just $1,000. Bid-ask price. The bid is the price at which you can sell a currency, while the ask is the price at which you can buy it. 4. Benefits of trading Forex. Liquidity. The Forex market is highly liquid, meaning you can easily buy and sell currencies without affecting their price. Accessibility. Forex trading is accessible to anyone with an internet connection and a trading account. Low costs. Most Forex brokers charge low or no commissions, relying instead on the bid-ask spread. 5. Getting started in Forex trading. Choose a reliable broker. Research and select a reputable Forex broker that offers a user-friendly trading platform, competitive spreads, and robust customer support. Open a trading account. Complete the registration process and fund your account. Learn and practice. Use demo accounts to practice trading without risking real money. Educate yourself through tutorials, webinars, and trading courses. Develop a trading strategy. Define your trading goals, risk tolerance, and preferred trading style, e.g., day trading, swing trading. Stay informed. Keep up with global economic news and market analysis to make informed trading decisions. 6. Risks involved in Forex trading. Market volatility. Currency prices can be highly volatile, leading to potential losses. Leverage risk. While leverage can amplify profits, it can also magnify losses. Psychological factors. Trading can be emotionally challenging. Discipline and risk management are crucial to avoid impulsive decisions. 7. Managing risks effectively. Use stop-loss orders. Set stop-loss orders to limit potential losses on your trades. Diversify your trades. Avoid putting all your capital into a single trade or currency pair. Stay disciplined. Stick to your trading plan and avoid emotional trading. Thank you for watching our comprehensive guide on how to trade Forex. By understanding the fundamentals and following a disciplined approach, you can navigate the Forex market successfully and achieve your financial goals. Engage with our community of traders. Share your thoughts on Forex trading, ask questions, and connect with fellow viewers in the comments below. Let's navigate the Forex market together and achieve financial success. Don't miss out on the latest Forex trading tips and financial insights. Subscribe to Global Forex Guide and hit the bell icon to receive notifications whenever we upload new content.